Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Greene shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing. My guest today is James Faillettaz. He runs a company called Revolution Realty. And now he's in Minnesota, but he has his hands in a lot of different parts of real estate. It's not just a brokerage. We're talking investing, renting, and construction. So we talk a lot of construction, a lot of property management, and you know how this goes. We just talk a lot of real estate right now. This is episode 329 of Zen and the Art of Real Estate Investing with my guest, James Faillettaz. James is the founder and CEO of Verus, Praedium Holding, the platform behind Revolution Renting. But wait, he also owns Revolution Property Investing and Revolution Construction. The guy just likes real estate. James, welcome to the show.
Thank you. Appreciate being here.
Yeah, I like to talk to people with a lot of hands and like a lot of different bags. But if you look at all the different companies and things that you've done in real estate, what's your favorite part of the business from the businesses, and which one is the hardest? And we may have touched on it in our pre-call.
Yeah. So, I mean, I probably should, we're flying pretty fast right now. So in the last year and a half, we also started a real estate agent team.
Right. You have a team under a brokerage. Yeah, I have my own brokerage, so I understand the models. Yeah.
Yep. So, I mean, I guess starting with the second half of your question, I think property management is probably the hardest.
That's what I was guessing. Yeah.
Yeah. In some ways, it's the most rewarding because we do a lot of low income kind of subsidized housing property management, and moving one kind of, you call it unit, or like just like helping somebody move up one stage there, I feel like more meaningful than like taking somebody who's making 100,000 and like helping them to make 200,000. That kind of. So the mobility ladder is really available and like can have a lot of impact. But you're dealing with a lot of different archetypes of people, a lot of different personalities, a lot of different like large stress situations that people are in. So it can add up sometimes.
Yeah, I feel like, I know property management, you have to be very nimble and very good with people, and you can't react, like your first reaction can't be that, because you never know what they're going through, right? They may call, for a toilet issue and you may think it's their fault, but maybe there's a lot of things people don't know, other things happen. It is something where you really have to kind of take a breath before handling everything.
100%. And I feel like you, especially with this, we have about 250 units that we manage right now, roughly. We're growing, but at this size, you can't have complete specialization.
Yeah.
We're doing kind of the departmental style, not just a property manager, 200 units, go do your own thing. It's like leasing, rent collection and delinquency, tenant success, and then maintenance and repair. But at 250 units, we can't have a department head and an employee in 4 different places.
Yeah.
Like 250 units don't support a 10-person staff yet. So people do have to be more nimble.
Yeah, but I also feel like that setup is a better setup to grow big. Like you're setting up early for what you want to be later, because that will be a much better thing when you can have employees in each division, right?
Yeah, 100%. And I think it's always the future is always what we have in mind when we're building. I think we're casting a really long vision. I think some of my mentors and some companies that I look up to are like, does this make sense? If we do this today, would we be happy that we did this today and 20 years from now?
Yeah.
And it's like, oh, that's a lot to think about.
Yeah. Yeah, but it helps you be more long-sighted, especially with the structural setup of businesses, which is important because sometimes businesses kind of reach that critical mass and you have to re-architect everything that you built because you didn't plan for the future. I mean,
Yeah.
like, who doesn't want to grow a business? So you might as well, set the stage for what might come.
Yeah. And we've already, in my journey so far as a real estate entrepreneur, I've already had to rip it all down and
Yeah.
change up legal structures, and it took 14 months. And I'm really lucky that I have some like nimble and like creative LPs in my first kind of group, because we had to just put on our big boy pants and say, hey, this is what the contract says, but what do we have to do to make everyone happy?
Yeah.
Like, we don't want to get into legal battles. We don't want to do this stuff. Like, we had to restructure the whole thing.
Yeah. Well, let's go through your businesses just to set the stage for the listeners. We talked about you have a property management business, you have your brokerage team for agents, and then what are the other ones? You have an off-market acquisition investing business as well, and then construction?
Yep. So full disclosure, we kind of felt like we were sailing on too many ships. And in May, we bought a property management company. And we basically just decided to have our property management company buy this one and then cannibalize our construction company. So
Oh, okay.
our company is alive, but we never really did third-party construction.
It was for your own acquisitions. Yeah, that makes sense.
So we're still keeping the LLC. We might start, pushing back into it. It's still a brand, but it's not. It's kind of put on ice for now, if you will.
Yeah.
But then, so property management is full in-house maintenance, turnover, inspections, all in the property management side. And then real estate agent team, we primarily do large multifamily and commercial leasing. So
that's very interesting. Yeah.
Dynamic. We had the opportunity to have a really good partnership with a large redevelopment company here in the Twin Cities called First and First. And the two guys that are at the top of that company, I really admire them, and they're very creative, and I think we work really well together. So we lease out all of their about 2 million square feet across the Twin Cities for them. And then with the synergy between the investment company just buying our own stuff and then the property management company, large multifamily just kind of felt like a space that we wanted to operate in. So we sell large multifamily, and we help buyers buy it, and then we also buy it ourselves. So we have about 4 or 5 listings up right now. We're getting a couple things traded off market, and then because it's kind of passionate to me, we do some small multifamily.
Yeah,
because that's how I started. Me and my mom moved into a triplex studio.
Oh, awesome!
And we house hacked our way into this.
Yeah.
So, some kid hits me up on Bigger Pockets and he's like, I want a house hack. I want to move into a duplex and build up an empire. I'm like, well, if you're serious,
I'm the same. I still do it. I really feel for that first investment, though. I want to get your take on this, though. Like, first investors to me, they're all super motivated, but then I would say they're 50-50. Like, they're really motivated and they listen. And then the other 50% are just taking what I say and putting it into ChatGPT and asking their friends and ruining the transactions and getting fired by me.
Yeah. And it's unique. It's really come about in the last year because AI is moving faster than I can really keep up with at this point. But I think you have the real analysis paralysis, a kind of accountant type.
Yeah. Always crunching the numbers. Oh, it doesn't pencil. Which you're going to be saying that. Yeah.
Beneficial, but it's really hard to be that archetype.
Yeah.
And be kind of like the solo entrepreneur starting your journey.
Yeah.
There's nobody ripping and running and shooting from the hip.
There's a reason they never start because there's just always another tweak that you can make where it doesn't work. Sometimes you have to just kind of get off the pot and get it done.
Yeah, 100%. And then, the other side, and this is kind of where I was, and, cross my fingers. I'm very thankful that I survived, but it was kind of I didn't know what I didn't know, and I rip and ran, and I just, we painted the whole outside of a house for a triplex so we could close on an FHA loan before we even closed. Because
you had to do the FHA repairs. There was peeling paint or something. Yeah, it makes sense. Yeah,
but they could have just canceled the transaction.
I know. We've had to do it too, and it's but I think that's smart. And at least then you're getting the experience. And I think what we're talking about when the people, get that analysis paralysis, which I don't think it's real. I just think it's a lack of confidence that they haven't built from either meetups or meeting the right people or knowing other investors who have done it, or accountant mentality, crunch, crunch, crunch. But I feel like you have to just kind of do it. And if you've done enough research on real estate, read books, talked to people, gone on Bigger Pockets, you're not going to lose money if you get a good buy, not the perfect buy.
Yeah.
I don't know about your market, but there's not even good buys in my market in New Jersey. But across the Midwest, there's a good buy. It just means that it's a steady asset. It may not be the cash flow that you expected because you started looking 7 years ago and are still looking and hoping for these 1.5%. No, that doesn't exist. If you can get a 1% rule, like that's pretty solid now.
Mm-hmm.
Let me ask you about your real estate team, because it's a very interesting niche for a team. I'm someone who had a team of 50 residential agents when I was at other brokerages. Again, now I run my own independent brokerage, but you don't see a lot of teams operating in that kind of quasi, not full scale like commercial space doing that, but really focused. I think it's really smart. How's that working? Because I feel like you probably don't have a lot of competition in terms of other, there's probably other, agents who do it, but not a team working in these areas.
Yeah. And it's, I think it's twofold. One, I think it was kind of like, we know we're going to do this. We know we can provide value. Where are our biggest opportunities? And let's just infill them.
Yeah.
So like multifamily, I'm connected with that world. We do the property management. I can walk through and underwrite it in my head, talk to you about the construction, property management. Like I know that I can infill that opportunity. And then commercial leasing, like we had the opportunity to lease this warehouse. We kind of got some reps up and we did some kind of bottom up and top down kind of guerrilla marketing.
Yeah.
Where it's like the top down is, beautiful OM, CBRE, LoopNet, everything like that.
Yeah.
It's just clean. But the bottom up was like Facebook Marketplace ads in different languages, boosted for $2. And like that really worked too.
That's great experience though.
Yeah. And it's, I think it's helpful for the collaboration between that commercial leasing side talking to, because I'm very intentional about everyone being in the same office so we can share kind of like tips and tricks and energy and things like that. So commercial leasing team talking to residential leasing team. Whoa, what are you doing? How are you boosting? But it's tricky because in the multifamily space, you have players that are in the private cap world.
Yeah.
And there's like probably off the top of my head, 5 or 6 like real players in the Twin Cities. So we're kind of competing against them. We're, newer and maybe a little bit more gritty, but not as granular, not as focused. So like they're probably, we probably control very small amount of market share, but we're still getting it done. And it's only a third of the pie chart of our business. And then the commercial leasing one, that's the one where I feel like we're actually really kind of doing some creative revolutionary stuff, because a lot of the big commercial leasing gigs go to these behemoths and they just operate slow. Me and my, director of operations for the agent business, we joke around all the time. We're like, let's send these guys like mail. Let's send them a postcard. They'll probably get that before they call us back.
Yeah.
Like they never pick up their phone. And it's like, hey, I want to lease 10,000 square feet on Main Street from you. And it's like, 3 weeks later, they're like, oh yeah, I was golfing in Florida. Like, do you want to lease? You want to lease what? What was your name?
Yeah.
And it's like, it just feels like you kind of have the credibility to break into the space, because these big commercial landlords don't want to hire Joe Schmo. And there's some marketing costs, like the banners and hanging those things and paying for ads and all the softwares. Like you have some upfront cost, but it's like, we felt like we could just rampantly take market share because these guys they suck at it.
Yeah. Yeah.
Quickly.
I think because it's built a lot of commercial, especially commercial leasing, is old school and the vacancy rates are intended to be long. People just expect it to sit 6 months, especially now, depending on what type of commercial leasing. I mean, like retail, who knows how long it could take. So it's easy for somebody to check out. But yeah, I think it's ripe for, new up and coming companies to take that market share, because there's just different ways of doing things. Like you said, some places you're not going to do your full scale spectrum, Crexi, CoStar, all the things that you need to do. There just might be a better way because it's a more local opportunity for a local
100%.
business, depending on what it is.
Yeah. No, and we've really seen, the kind of starting at both ends. So the top down with the OMs and the platforms, but then the bottom up with the kind of more creative guerrilla style marketing has really worked well for us.
Yeah. I wanted to hop back to that house hack that you did with your mom. Who kind of chose it, and did you know you were house hacking when you went to do it?
Yeah. So I'll try not to make this too long. But in the beginning of college, I thought I was going to be IB and PE. Started the real estate investment club at my college, really frankly, to put it on my resume.
Yeah.
I mean, me and a couple of friends did have a passion about it, and we ran it together, and it was kind of fun. But like, it was there so I could get a job at Piper Jaffray in Minneapolis.
Yeah.
Ended up basically not being qualified and kind of not liking the culture of it for investment banking, but I still ran the club. And then somebody in my life who I went to high school and college with, we were swamped, and I was like, hey, do you want to speak? I know you've done some stuff with, I think it's called real estate. Like, do you want to come and talk about it?
Houses, those things out there.
Yeah. And he comes in, and I'm sitting there, and I'm like, man, I got to test. I got to do this. And he starts talking, and I'm like slowly, what? What'd you say?
Yeah.
Because I had traded stocks at the time. I had done some stuff, like nothing, expert level at all. But he was like, yeah, you get something called a FHA loan, and you only have to put 3.5% down, and you could leverage the rest from the government. And then if it's like not going super well, you can just go in and do the work yourself and paint it, and then it actually bumps the value, and you're just spending your time. And I'm like, wait, I can't go into Target and paint something, my stock go up. Like, I can't manipulate it with my hands.
Yeah.
So it's just like, it really started to intrigue me. And my mom was, a real trooper. She was kind of having a hard time paying rent at the time, but also just like a true believer in me. Like always,
awesome.
always backed me. Like really supported me. And I was like, do you want to move halfway across the city into this triplex? Me and you can live in this studio apartment, and you won't have to pay any rent. And like, I'll put the down payment down. And she, she thought about it for a couple of days, and then she was like, yeah, sure. Like, if it's going to help you, I'll do it. And I mean, very thankful to her. But yeah, met with the guy for coffee a couple of times during that summer, kind of walked him through a couple of deals. I found an agent. And then we bought a triplex at the beginning of, or we put a triplex under contract at the beginning of August. We painted the whole thing. It was done by the end of August. We lived in the studio apartment for like 2 weeks together. And then I went back to school for my senior year of college. And I'm at school, and I'm like, these numbers look great. Little did I know, my mom became like a lawyer. She was writing contracts like a contractor. She was painting the walls.
Yeah.
A property manager. She was leasing out the apartment. Like, I almost naively was like, oh, this is easy. And the numbers look unreal, and not really understanding the back end operations of it.
Yeah.
But yeah, that was kind of the first deal. So a lot of love, a lot of like kind of serendipity, but I mean, it's got me to where I am today. And I think, made a huge impact.
Do you guys still own that?
I still own it.
Yeah, that's nice. I mean, it's kind of like eventually everything trades because there's other opportunities, but sometimes one just performs so well. And that just proves you made a good asset purchase. I call myself an asset hunter and try to help, residential investors look and evaluate the asset instead of crunching the numbers crazy. Like, sometimes the numbers don't look that good, but you look at the property and you're like, this is good. There's no capex here. And that's what they don't, you didn't know that then, but now I'm sure when you go, it's like, when you're looking at something with no capex, that the numbers don't change, but that it's better because you're not going to get a big windfall that you have to pay, barring like act of God type of situations.
No, 100%. And like, it's the grass is always greener, right? Like, I'm sitting there, and this is 2018. And I'm like, man, why couldn't I have bought in 2008? Like, this 3.75 interest rate is kind of high. And like, I'm so fresh. Like, I didn't know 18% interest rates in the 80s. Like, I'm mad. I'm like, this is $50,000 more expensive than it was 2 years ago, and we have to pay, a point of interest more. Like, should I even do this? Like, I almost got this analysis paralysis.
Yeah. That's good experience, though, to help talk people back into it. I get to a point where I just have so much experience that I just can't do it anymore. Like, I'm not a hand holder. I'm just like, like you said, big boy pants or no, but like, I'm not doing the diaper thing here. We gotta get this going. And I understand, like, I think even now at my career, and a lot of people I know, still when you get something accepted, you're like, oops, like, oh shit, now I have to close, and so I get that feeling, but it's really like going back to, what's your goal? If your goal is to get real estate, you can't freak out every time something happens. But, that's why property management exists. So landlords can get a little break on those things that I personally think will break just landlords who didn't understand what they were getting into. Do you agree with that? I mean, it's hard for people to self-landlord if they're not a people person or handy.
Yeah. No, I 100% agree with it. And it's like, I think sometimes you got to roll with the punches and go off script too.
Yeah.
Like even this morning, this little short story, but like this woman was in one of our units and like she's not on the lease. Her boyfriend actually went to jail.
Happens.
Long
That's
story
being
short,
property management. Yeah.
Property management. But she's like, I need the key to this mailbox. And I could have texted her back being like, on script, It's like, I can't, you're not on a lease. I can't give you the key to his mailbox. I don't even know you. Like, but like if I text her back like super on script like that, she might just go and break into the mailbox. Like, I don't know.
Yeah. And she's in the house. So, rocks down the toilet at any time. You're welcome,
right. So it's like kind of being able to be nimble, going off script, making sure you're like humanizing people, but then also like making sure that like you're thinking about the context in a larger situation. And this comes with like putting in the reps and the context and the muscle memory and stuff like that. It doesn't happen overnight, but
yeah.
Yeah.
For me, I'm an introvert and like everything about being a landlord is super uncomfortable. I don't even want to talk to people, much less tenants having problems that are, conceivably potentially my fault. It's just so uncomfortable.
Well, that's why you start a podcast, right? You don't want to talk.
Right. I mean, I can just talk all I want, but I don't even have to leave, my office. But it's like, I just feel like for new investors, when you're talking to them, even on a large scale, they're getting a large scale apartment, even if they're planning on management, they still have to manage the managers. So there's still like, I think if you go, you're watching TikTok, you might think buying, a 20-plex is passive. It's not passive at all, even if you have management. And unless you work with the management for 20 years, it's going to be closer to passive, but you still want to be reviewing everything to make sure you're not leaving money on the table.
Yeah. And I think, I was having a conversation with a friend the other day about this, and like AI is getting rampant. It's getting really, really smart. And he was like, are we going to like, is brokerage going to be a thing? Like, are people just going to like AI model run every deal in the Midwest and tell me what is a good deal? And like, but I think there's some piece of it that's like this psychological true operations piece that I think people are going to get really burned on.
Oh, I agree.
I mean, sitting in New York who's running the spreadsheet and being like, this is a good deal, isn't going to understand that little mold in the corner of the basement, that's going to cost you a lot of money. Or when you rent out to this kind of like, you just let any application in this tenant base, like you're going to lose the culture and control of the building. Like that kind of thing. Those intangibles, I think, are going to take a lot longer to work themselves into AI. If, I mean, I don't want to say if ever, that it's getting crazy.
Yeah, but I saw like a robot like cleaning a bathroom, and I was like, damn it. Like it was scrubbing it was funny though, because it wasn't perfect. It scrubbed the toilets and then it scrubbed the sink with the same brush. Yeah. So it was like, you did get caught there. But yeah, I always say when people say like, oh no, I'll just put it in ChatGPT. I'm like, well, okay, well, ask ChatGPT if it can smell the cat piss in the house.
Yeah.
Or did it do a 360 to see what the grading was like and if there was, past water issues? And like you said, I think it even applies to management. It may look good on the numbers, but what if the numbers look good and you didn't count in the management and then you didn't realize you were signing up for a second, 9 to 5 and now your kids and your family are mad and why did you get this property? That's landlording to me.
100%.
Hey, it's Jonathan. I hope you're enjoying this episode with James. On this brief interlude, I just want to remind you that I have a Substack now. It's all free. It'll stay that way probably until the end of the year. But I just post random stuff. We've got blog posts, and also on there we have guides. So we're working on a bunch of guides for all the asset classes. We've got a guide to midterm rentals and a guide to short-term rentals up there. So go to Greene, that always has an E at the end, .substack.com. You can find all of the articles that I write. Sometimes they're just off the cuff, and they're just for you, real estate investors looking to get to the next level. Let's get back to James.
For the people who are just regular investors buying these large scale multi, what type of unit count are we talking about? Where you're just like regular, I would say like your new mom and pop are buying them, maybe even as a first time. How high are people going in your area for the properties that you represent?
So you're like, just to make sure I understand the question, you're talking like on brokerage when we're doing multifamily representation.
Either buyer or seller, just for a solo buyer or a couple, like what's the max unit that somebody like that is buying, and does that worry you?
Well, we haven't flexed our muscles enough to like break into the full space. So we're still working our way into market share. I mean, we've sold I think as big as like a 19 unit.
Okay.
To a singular person. We sold an 11 unit to somebody who'd never owned multifamily before. We sold a 15 unit to a couple based out of California, and we do their property management now.
Yeah, that's good. 11 I really like. 19 I'm worried about for someone who hasn't done it. Does that make sense to you? I feel like 11 somehow, it's a lot, but I don't know. You can I feel like that's just a good number because you're going to make a lot of money. 19, you're going to make more money, but you have a lot more problems.
Yeah. And it depends on, the style of the building too.
Yeah.
This 19 unit, like there's a couple things that probably need to be done, but all new electric, all new plumbing,
sweet.
Like, all new boiler, and like, some cosmetic updates. The roof is newer. It's key fob entry. Like,
oh, that's nice.
If you can kind of get that product and just do a little bit of the hard work up front, like, I don't think that's going to be too bad.
Yeah, that sounds good. The 10 to 20, it's just like, do you understand what you're doing and what kind of tenants are you walking into? Are you walking into, under market rents or, cooperative and good upkeep so the tenants are excited and now new management has changed? I mean, sometimes when they have bad operational, it's really great when you buy that property because now you're the hero. You go fix up the outside for the first time in 6 years and now all of a sudden their insides are going to feel better because someone actually gives a shit now.
Yeah. And we've taken over some pretty tough buildings and just like, we're not perfect. And especially as we grow, we're not as efficient as we'd like. But, you take over a building and you put up some cameras, you put down some rules, you get rid of 3 or 4 people that just like are not participating in the community like you want. And like, you can change building culture. And we've gotten calls, like my director of property management has gotten calls being like, I didn't really feel safe walking around in my like apartment.
Yeah.
Until this week. And it's like, what do you mean? She's like, the people that, kind of the people that were here felt like they could act in a certain way for the last 4 years. And like, just kind of that little shift, then you become a product of your environment. Then you have the culture shift. Then it's like, the masses are kind of policing themselves a little bit too, when they know that these things are bad. And we live in a community that knows these things are bad now.
Yeah, I've had a lot of like large scale 100 unit and up multifamily operators and GPs on, and a lot of them have said when they go in to a property like you're talking about and all they do is put lights on the whole outside and put up cameras, a lot of people just opt out right away. Like they know, it's not for them when it's like that. They need to go to a place with no cameras and no lights. But it does make a difference for the residents because as you were saying before, say you get a 20 unit and you just don't pay attention to one tenant, you say, oh yeah, they look fine. You put them through, and now all the other tenants are mad. Now you could, if there's inventory out there, they may be trading out, if they're on month-to-month leases, and then you end up with a much higher vacancy than your spreadsheet expected.
Well, and it's also the broken window theory. And this is
for sure.
something that, being completely transparent, I've really struggled with some of this in the past year, where it's like we take on these new opportunities, but then priority A was these 2 buildings before, but now they're priority, A2 or B1.
Yeah.
Because these bigger, new, shiny buildings are priority A, and then they start to slip slowly and slowly, but then it's exponential, because then it's like, oh, there's one, broken car in the parking lot. Broken cars in the parking lot are okay now.
Yeah,
there's one, grill on the deck. Grills on the deck are okay now. And it's the tragedy of the commons when the culture shifts, like it sets new rules. Well, that's something that we're trying to figure out in the property management space of like, how can we take on new opportunities, grow, stabilize new buildings, but also make sure that on a cadence, we're really checking in on everything we have.
Yeah.
Make sure they don't start slipping, and then that slippage starts to scale.
Yeah, I feel like it's like a checklist manifesto thing. It's like you just got to make sure to be checking all of those same boxes all the time at all the properties, from C to D to all the way up to A, because they all kind of require the same oversight. And then as your managers get more comfortable, they start to see where the other things can be added, to the checklist, because I think it is hard. It's hard to keep up. Some buildings are going better. And as I was saying, even for an experienced property manager, when you have 10 different buildings and one really sucks, you really don't want to go there. So you're going to everything gets put, it's number one. I think it'll be fine till tomorrow. But then you're right. It is a compounding thing. And then what you thought was one broken window is now 4 and some other junk on the lawn. And now you're in trouble. It's going to take much longer time to get it back to what you wanted.
100%.
And you'll get more complaints, for obvious reasons. And you should.
Yeah, and you should.
Yeah, I don't you think that I think self-awareness as a property management company is really important to understand. Like you were saying, you've said a lot, we're not the best at that. I think that really helps you grow as a business, because you're always looking for the things that you're not doing well and what you can fix. And instead of taking tenant feedback as a slap in the face, you're like, actually, that's a pretty good point. Some tenants are, off the rails, but most tenants, if they're just nice, that feedback's going to be pretty good.
Yeah. And I think I've definitely grown and learned this, but if you kind of make excuses for yourself or try and shine the light on yourself in a little different way, this as well as anyone, we're entrepreneurs. We have 30 things going on at one time.
Yeah.
If I, cognitively tell myself that this is not a problem, my brain will be like, all right, next thing, what are we doing? But if I'm honest, especially vocally out loud to other people, and not trying to borrow from the future, not being well, it's going to be taken care of in 5 days. It's this is a problem right now, and this is something that is going on.
Yeah.
It kind of in my mind at least, sorts itself out in the priority list, because it's just telling the truth. It's being honest. And then I don't have to sort through my own head of being okay, I said this, but is this really true? Was I just saying this for image, or did I say this because it da-da-da? And it's not always been like that, but it's just I think that as we get busier and busier, and as we're trying to scale and build a base with integrity so we can do that, it's very important to, twofold. One, just kind of be self-aware and honest about what's going on so we can solve those things. And then 2, not, and I'm a little bit of a culprit from this, because I kind of like to manifest from the future and say things have happened even when they haven't. So it's this,
got to make sure they happen then.
Yeah, it's this in between, pressure is a privilege, but I don't want to be oh, we're going to close this. I'm actually the one who's most guilty of this in the office. My real estate agent team is telling me this all the time. I'm why didn't we move that to pending? It's well, because we're not sure. It's oh, but it's going to close. It's fine.
Yeah. Yeah, you would try to get that scoreboard working. In
Yeah.
terms of your personal acquisitions, what's the unit counts that you're looking for in your market that makes sense for you as an investor to buy?
Yeah. So we're open. I think we're just my acquisition journey has been interesting. For the first 4 years, it was like 2 to 3 unit buildings. And then we got a little bit more creative on the financing side. And then we took down a 17 and a 15 and kind of started to manage those. And then we took down a 33 with about 20,000 square feet of commercial, and then a 36. And those were all creative financing purchases with only me. So like no kind of investors, no other interest. There's back end creativity with the sellers, but I didn't raise capital since 2020 because I kind of was like, that was a shit show. I don't want to do that again. But now we're kind of, we're looking at, we've created some good partnerships. We have operational partners where it's like they could be an LP, they could be hard money, and we're looking at it that way. So we're somewhere between 20 and 100 units in our buy box. And I know that's a pretty big stretch. But if the right 100-unit building comes along, I think
you have management, so you can do it. That makes it easier. What levers were you pulling for the creative finance that you think might be a little bit more creative than people would expect? Obviously, you want to match their price and your terms, but there's a lot of things that go in the back end for experienced seller finance and creative finance people where it's like, what was mattering to the sellers in these transactions that helped you get them?
Yeah, so there was 2 different parts of the transactions. There was 2 different seller archetypes, which was interesting.
Yeah.
There was the GP and then there was the LP. I think the GP was like, hey, I have a lot going on and I'm having a hard time just taking care of things. I don't want to give this away for free. I don't want to lose money. I don't want like my reputation to be tarnished. But I don't have the same energy that you may have to push into this. So I think a little bit of time value there.
Yeah.
And then the LPs are kind of like, hey, we don't want to lose money. We don't want to we don't want to cut you into the deal for free.
Yeah.
So it was this kind of like speed, timing. Like time isn't that big of a factor because it's like, this is LP, some is small checks, some is large checks, but
it's more like time annoyance for them. They can't keep up and you can.
Yeah. And then, just like safety, feeling secure. So we did, I came up with this big scheme. I had the property management company, I had the construction company. I was like talking to a couple buddies in a mastermind, and I was like, hey, I think I found, the thing. Like if I turn a unit, I'm going to get 2.5% equity, and then the management fee isn't going to increase by 25 bips every time I do. And it was like, no, this is ridiculous. What are you talking about?
Right. But that's on a spreadsheet. It probably looks pretty sweet, right? Yeah.
Yeah. But they were like, one of my friends was like, hey, you have the concept. Why don't you just, call an expensive contract lawyer and talk them through it a little bit and see what they think. So I called a contract lawyer named Lindsay Hobbs out of Tennessee, and she was like, okay, I like this, but why don't you just do, this is multifamily, this is residential, but like kind of borrow and steal from the commercial side. Why don't you just do like a full overarching master lease with purchase options?
Oh.
And it basically effectively is the same thing as a contract for deed without transferring legal ownership. So my kind of philosophy was, and I was able to do this because I could flex the property management and construction muscles and pour in some of my own income from the brokerage side. But we'll take this over. We'll take this over in 15 days. Like you'll be done in 15 days, and we'll do full PITI, utilities, maintenance and repair, the whole 9 yards. But like when we start to renovate units, when we start to bump rents, we collect full profit. Like you're not touching it.
So they get to ride on what they got to before you got there, basically. In some ways, yeah.
The caveat was we assess a fair market value strike price from day one. So let's say, hey, building's worth $1 million. You have $700,000 worth of debt. You have $300,000 worth of equity. Can we agree on that? You brought the building to market right now. This is what it's going to sell for.
Yeah.
So your $300,000 worth of equity, I'll give you a 24% return in 2 years on that equity. And I will waive my agent commission when I transact. So 4% agent commission on $1 million building, that's $40,000. 24% return on $300,000, that's $66,000. That's $100,000 gain. They're making about 34% return in 2 years just by doing this master lease structure with me.
Yeah.
And then what I'm doing is, one, I'm benefiting from their principal pay down on really low note debts.
Yeah.
So the debt is doing 60% of the work for me. Me waiving my agent commission is doing the next 30%. So I'm really give them a very marginal return, but they're still getting their return. And then I go in, I renovate the units at really reasonable costs. In the beginning, it was me getting my truck, going to the suburbs, buying stuff off Facebook Marketplace, bringing it back, and me and two guys just in the units ourselves. Eventually it grew. And then we're raising the rents because of the new kind of renovated units and because of the culture changes. So we're striking on a building in March. So next month, after the 2 years, we're striking for, our strike price is $81 a unit. And the bank just appraised it for $115.
And that's your windfall then.
Yep. So I put in $90,000 into this building in construction, and then the profit from the building started to pay for the construction.
Yeah.
So then the bank is cashing me out $90,000. They're doing the full strike price, cashing the LPs out, or the old GPs and LPs. And then I have this $400,000 or $500,000 delta between market value and note. So the bank is still happy with LTV.
Yeah.
We're at a 1.65 DSCR. And I basically get into this building for free after 2 years. And that's how we took on the last 101 units.
I'm glad I asked, because that was very complicated and not what somebody would think. It's like, oh yeah, I just talked to the seller. He said he wanted to move out. Oh, okay, cool. Yeah. No, that's pretty interesting. And I mean, I think it goes to what you're saying, that, it's called creative finance for a reason. It's not just one thing. There's a lot of different levers you can pull. And you pulled one between having a brokerage and the property management. So, well, I can give up the commission here because I'm going to get the money through property management. And it's also going to be, a windfall for the long term.
Yeah, 100%.
Yeah, that's interesting. So now, and I guess now you kind of have a proof of concept and set up to pitch other owners and say and you also can say hey, this is the structure for these 101 units now. You have a little bit more that you can sell them on than just the first time that you tried this and was like, oh, I got to talk to a contract lawyer. This doesn't make any sense.
Yeah. And it's, we're getting a little bit more dynamic too, with the size that we're at now. I mean, it's nothing crazy, but there's a proof of concept. We're actually making money now. So I can go talk to my wealthy friends and be like, hey, you have some money, you want to do some hard money lending on this, or do you want to be an LP on this? And it's a little cleaner. I'm not opposed to doing the full blitz, contract for or master lease with purchase options. Yeah. But it is capital intensive. I mean, some of these properties we're taking over and it has a negative DSCR. And then we have to go renovate the units. And it's we're pushing a lot of money in there. So if I can, probably for the next 1 to 2 acquisitions, if I can over raise and have the buffer and not have to spend a bunch of my own money, maybe do it a GP co-invest or something like that.
Yeah.
But have the working capital, have the buffer, have the burn. I think that's where my comfort level is right now.
Yeah, I think that makes sense. For the Midwest, of course, you're in Minnesota, but do you still think that the house hack is viable? I personally do, but I still like it's got to be market specific. Here, you can't house hack and make money. Like you're house hacking usually with a net negative, especially if you're not taking a tiny unit like you guys did. Sometimes they're like, "Well, I need the big unit." It's like, but you don't make the money if you take the big unit. You got to live in the basement. I mean, that's how you make money.
Yeah.
Are you still seeing it as viable for first-time investors to house hack?
Yeah, 100%. And I think, one of the parts of the spiel is like, hey, when you're house hacking, there's a spectrum. This side of the spectrum, you're in a class A neighborhood and a class A, side by side duplex that was built in 2024. And you are house hacking, but like this is the side of the spectrum here. Yeah. And then there's this side of the spectrum where you're taking on a building and the other unit that is kind of a unit in the basement has no carpet. It's just concrete and like it's livable, but like that's where you're going to live and you're not going to be in a nice neighborhood.
Yeah.
But like, boy, are you going to cash flow from day one.
Yeah. And you'll learn. You'll learn some hard lessons, but I mean, that's part of it. It is hard, I think, to get people to wrap their head around it because again, it is easier to pull that, scenario A, like you said, but that also costs a lot more.
Yeah.
So they're weighing what they can afford and what was worth it.
Yeah. And it like, I think even at like the 25th, 40th, leaning into like the 50th or 60th percentile on the spectrum, you can still find a deal.
Yeah.
Like they're still there, especially in the Midwest being more of a cash flow market. The price to rent ratio in like C to B class neighborhoods are pretty good. So it's, it's not impossible. But it's definitely gotten harder. I mean, we bought a triplex for $245,000 and we got a 3.75% rate with no PMI and on a 30-year amortization. Like,
boy, them days sound good.
Yeah. Yeah.
Yeah. So for people who want to get started now, what do you think the biggest mistake that first time investors, I know we talked about it a little bit in the beginning with analysis paralysis, but like, let's just say multifamily, someone wants to get into multifamily that's maybe not a house hack. They want to straight out invest in some apartments, whether it be 4 or 5 units up to, 10. What mistakes do you think you can help them avoid just with a little advice?
I think it depends situationally, like where they're at. Are they trying to they're working the, high paying W-2 job and they want to be absolutely passive, but they know real estate investing is kind of the niche that they want to do. Probably a little bit of different advice from like hey, I maybe inherited $100,000 or I've been diligent in my savings, have some money now and I have time. So, I mean, I think speaking a little bit more broadly, I guess whatever side you're going in on, like, especially if you're younger or if you're starting out or if you at least have like 10 to 20-ish years of runway, maybe longer.
Yeah.
Be generous and give some stuff up in the beginning. I think that will pay dividends for you. Bring on a partner, vet your partner.
Yeah.
But if you're the high-end W-2 guy, like the first investment's not going to be like, maybe you get lucky. It's not going to be the grand slam. Shohei Ohtani's not hitting it out of the park, but like,
and then also pitching a shutout. I mean, that's what they want though. I mean, that's kind of the lure of what people are looking for.
But, you might be the guy coming up from the farm team and like you get to sit on the bench.
Yeah.
You're not making the big bucks, but like you're there. Like you have put the money down, you have an operational partner. Maybe you even like were really generous and said, I'll do all the money and we'll do a 50-50, like after capital's return, no pref, like, because I want to have a seat at the table. And I don't have too much time, but like, I do want to talk about this every week or every 2 weeks. And I think being a little bit more generous and finding a strategic partnership in the beginning, you get to learn so much more. And then on the flip side, if you have the time, and and maybe the money or not the money, like maybe bringing on a capital partner, but then being in it yourself.
Yeah.
Doing the leasing, doing the turnover, like hiring a couple guys off Craigslist, like, and just being like, hey, yeah, well, like I'm going to be in the unit with you. We're going to paint it. You know how to do the plumbing. You know how to do the tiling. I'm going to be here. Like we're going to kind of form this relationship, and you're going to realize, wait, you shouldn't charge me $3,000 for tiling a shower because it only took you 20 minutes to, put up the hardy board and like then do the mastiff and like, so yeah, I think that like either finding a strategic partner or being in it yourself, and it all revolves around learning.
Yeah.
Building up some kind of knowledge base and not like taking a little bit longer term view, because you don't want to make the move that ends your career to start your career.
Yeah, I agree with that. I think if someone's looking for something passive, they should just look to syndications if they're capitalized well, because you can't have any input. So, you have to ride along. You can't touch the money. It's not liquid, which again, people see as a con. I see it as a pro because you're protecting yourself from being dumb and trying to do a flip when you don't know what you're doing and hiring your first contractor that you met. And then they walk away with 20K. And then, they're like, oh, what do I do now? Oh, let me sell it. Yeah. Okay, great. They sell the shell that they messed up. Yeah. It's a hard lesson that can be learned quick. And again, rates aren't forgiving now. So there's less margin for error, I think.
Yeah, I completely agree. And I mean, sellers, I don't fault them. I've been a seller. My agent team has been like, you are such a hypocrite. But like sellers are stuck in the, hey, John Smith got this for his building in 2023.
Yeah.
I'm not selling unless I get John Smith prices right now.
Yeah. I love that though, because it's like, they're like, oh, I don't need to sell. Listen, man, you don't put it on the market if you don't need to sell. You may not like go cash poor if you don't sell, but you don't hire an agent, start doing showings and getting people bothering you if you don't want that money. So let's be realistic about it. Awesome, man. Is the best place for people to find you guys at revolutionrealtymn.com?
Yeah, so that's our brokerage site. I think that's got a lot of good information on there. There's also our parent site, which is Verus Praedium Holding, VerusPraediumHolding.com.
Yeah.
And that's kind of the holding company that owns the 4 Revolution companies. Got my work email on there. If you're young and hungry or kind of looking to get in or have some experience and just want to chat and you're in the Twin Cities area, office tours, we love bringing people through, and we're going to kind of start hosting more events here as we grow.
Yeah. Awesome, man. Well, it was a pleasure talking to you. I like the real life, kind of experience and the scale of what you did. And of course, your hands in a lot of businesses. So I think it's helpful for people to understand that you can do a lot of parts and you start figuring out which ones work better, drop some, move some up, and play around with it. That's the fun of it. So thanks so much for spending the time.
Yeah, absolutely. Thanks for having me on. Appreciate it.
My pleasure. All right. That was James Faillettaz. I probably said it correctly-ish. You can find him at Revolution Realty and Verus Praedium. If you didn't catch it, go back. He spelled out Verus Praedium's website because it might not be as you think. I'm Jonathan Greene. We'll see you next episode.
Thanks for sticking around to the end so you can get a preview of who's coming up on episode 330 of Zen and the Art of Real Estate Investing. And it's a solo episode because we're starting to bring back more solo episodes. The next episode is the case for starting as a passive investor. You've heard me talk about it with a lot of guests about my view that I think a lot of high income earners are going to go to passive investing instead of trying to do flips or own rental properties because they don't want to sign up for another 9 to 5. So we go all through it. Well, we meaning just me. Next episode. I'll see you there.